In my previous video, I spoke about 10 steps to start investing in the financial market, and we discussed 5 of these steps. In this video, I'm going to continue with the other 5 of the steps to start investing in the financial market. The 6th step to take is to choose a broker or a fund manager. Brokers and fund managers are intermediaries that help us to have access to financial products in the financial market. So they are very important, and you need to choose a very good broker or a fund manager for your investment. And there are key things to consider before you choose a broker or a fund manager for your investment activities. So the first thing is to find out whether the broker or the fund manager is legitimate or registered with the authorities. And in Ghana, it is usually the Securities and the Exchange Commission that regulates these kind of activities. So make sure to check. You can check on their website to see whether the particular broker or the particular fund manager you want to choose is actually registered. This will help you, and it will prevent you from losing your money to scammers and other activities that are not legitimate. So the other thing to consider is to look at the fee structure of the fund manager or the broker. What kind of fees are they charging? What percentage of your deposit are they likely to charge as fees? These are very, very important, so that you don't start today and tomorrow you realize that you made a mistake in choosing a broker because the fees are high. So very, very important. Look at a broker that is legitimate and a broker that charges relatively manageable fee structure that will help you to manage and also start investing. The next step to take is to start with an affordable monthly amount that you can easily contribute to the fund you've chosen to invest in. You don't need to wait till you get a lot of money before you start. Just start with small and keep it simple. For example, you can start with a mutual fund that allows you to contribute monthly, let's say 100 cedis, 200 cedis to it. And that will help you to be consistent in the market. That will help you to consistently contribute to that. But if you are waiting to have a lot of money, it could be that you have the money, you start, and you will not be able to continue with that amount monthly. So just keep it simple. Start with a small amount of money, and based on your income and expenditure, contribute monthly and consistently to this amount. And over time, you realize that your investment will have grown significantly in the market. Step 8, automate and invest regularly. What do I mean? What I mean is that you can arrange with your fund manager or your broker to deduct from source or from your bank account how much you want to invest monthly. In that case, the fund manager will take the money from your bank account and invest on your behalf. So you do not need to do the transaction yourself every month. And this will help you to be consistent, because there are months that you may not feel like investing, but automating it will help you to even invest when you don't feel like it. Step 9, keep emotions in check. Don't make emotional financial decisions, especially in your investment journey. One of the challenges, especially for beginner investors, is the fact that they tend to want to withdraw their monies as quickly as possible at the time that their investment product is not doing well, or they tend to invest a lot of money when the investment product is doing very, very, very well. In these two scenarios, they make financial decisions based on emotions, and it usually does not help. So make sure you keep your emotions in check. Once your investment goal is long term, don't panic to withdraw your money even when the market is not doing well in the short term. In fact, At that point, you can even buy more. So don't make emotional financial decisions because they will cause you. Be consistent in your investment and allow the market and the time to help you make gains in the market. The last step in this series is to review, learn, and adjust. It is important from time to time to check your investment and find out how it is doing in the market. And especially if you have chosen a broker or a fund manager that has an app that you can easily. So do so with these apps. And also, some of these fund managers and brokers have important learning tools that you can use to update your knowledge about the financial market. So make good use of these learning platforms or learning tools to update your knowledge, learn more about the financial market. Also, it is important to, from time to time, adjust, especially if it comes to the amount of contribution you make to your fund. This is because expenditures change, incomes change, and you can always adjust your contribution to match your current income and expenditure. So you can adjust how much you contribute to your fund based on your current income or your current expenditure. If you have found this video educative, don't forget to like, share, and subscribe to my channel. Thank you so much for staying, and I'll see you in my next video.